In this video, I'll provide an update of the performance of my InvestEngine stocks and shares ISA portfolio, and I'll also provide a summary of the performance of this portfolio for the whole year, the whole of 2024. I have a plan for this portfolio to reach 100k within the next 3 years, and I'm using this channel to document my journey. So if you'd like to follow this journey and get a bunch of other personal finance related videos, then I greatly appreciate you subscribe. But for this video, let's get into it, and let's start as always by taking a look at what's been happening with the markets over the past month to understand what factors have been influencing my own portfolio. The biggest factor driving the market this month is the actions of the Federal Reserve. I probably sound a bit like a broken record as we mention the Fed so much in this channel, but they're at it again, heavily influencing the market. On the 18th of December, they reduced interest rates by 0.25% to a range of 4.25% to 4.5%. This was good news on paper as the markets do like lower interest rates. However, alongside the rate cut, they delivered a hammer blow by suggesting fewer rate cuts than previously forecast in 2025 in response to concerns of lingering inflation. So essentially, they signalled a slower pace of easing rates than expected for 2025. And markets have responded extremely badly to this, particularly tech stocks. For example, on the 18th of December, Elon Musk's Tesla fell by 8.3%, Facebook's parent company Meta dropped by 3.6%, and Amazon gave up 4.6%. In terms of the overall market, the S&P 500 fell by nearly 3% on that day. This has heavily influenced the S&P's performance over the past month, as it's down by 0.75% at the time of recording over the last month. Fortunately, since that significant drop, there was a bounce back on the 20th of December, and that may have continued by the time I've released this video. And although this month has been negative, the overall year has been extremely positive and above average, with the year-to-date performance for the S&P 500 standing at over 25% at the time of recording. If we now bring it closer to home and take a look at the UK markets, we can see the FTSE 100 is down by 2.24% over the last month. But its year-to-date performance is in the green at 4.98% at the time of recording. You may be wondering, why is there such a big differential between the UK stock market performance and the US stock market performance? And there's many differences between the US and UK stock markets, but a big reason why this year and many previous years has seen the US fare much better is the performance of the big tech US stocks. For example, in 2024 so far, Nvidia is up by over 185%, and Meta is up by over 70%. The performance of companies like this has been a key factor in driving the above average performance of the US stock market this year. So overall, although it's been a relatively bad month for global markets and a particularly bad month for the UK stock market, it's been an extremely good year for the US stock market and big tech companies. So let's bring up InvestEngine's app and take a look at my portfolio's performance. We can see that my portfolio currently has a balance of £42,143. And in terms of performance over the last month, I'm in the red. The portfolio is down by £703 in pound terms and 1.53% in percentage terms. This performance isn't surprising given what we found out earlier, that it's been a bad month for the global stock market. We can see how this portfolio has evolved over the past month using the graph feature here, and we can see that for much of the month, the portfolio was stagnant in value. It was only when the Fed came out with the news that they expect fewer rate cuts than previously forecast in 2025 that any significant up or down performance happened with this portfolio. At that point, there was a significant dip in the performance like we also saw with the S&P, and at this point I actually made a deposit. I deposited £1,500. I usually make this deposit on the 25th each month, but I brought it forward a few days as I wanted to invest at a point the market wasn't doing too well, to try and capture some of the bounce back. Thankfully, there was a slight bounce back on the 20th, the S&P went up over 1%, but I'm recording this on the 23rd, so that bounce back may have disappeared, who knows. At the time of recording, it is there though, and you can see the slight upward trend at the end of the month. Nevertheless, despite the bounce back, this portfolio has had a bad month. It's down by over 1.5%. But I expect bad months with this portfolio. I expect bad months with my investing journey. I'm even expecting a bad year at some point. My overall goal is for the long-term trend to be upwards. If you look at the overall trend for any global diversified index, and even just looking at the US stock market with the S&P 500, you'll see that over the long term, the trend tends to be upwards. But over the short term, if you're looking at under a year period, and specifically months and weeks, volatility is high. The market goes up and down a lot. So the market is very unpredictable in the short term, but over the long term, it tends to do well. And this is my strategy with this portfolio, investing in the long term. I don't plan to take money out of this for over 10 years. So I don't mind the odd bad month here and there. And if we look at the performance of this year for this portfolio, we can see that this portfolio is up by over £4,450 over the past year in pound terms and 17.7% in percentage terms. And this doesn't even include the dividends I've received over the past year. I've received over £276 in dividends over the past year. So if we add this to the investment return here, this means that I've got an investment return in the last year of over £4,700. I'm extremely happy with this, as I wasn't expecting this year to be a good year for the markets. At the start of the year, many so-called experts and analysts suggested it would be a challenging year for the global stock market, but it's turned out to be a relatively good year for the global stock market, and particularly in the US. I wasn't expecting double-digit returns this year, so I'm happy with my performance. There'll be many portfolios out there which have done a lot better than this, multiples of this, but for me, as part of my long-term strategy, I'm happy with the performance. If we bring it back to the performance over the past month and take a look at how my ETFs have performed over the past month before taking a look at how they performed over the past year, we can click on the month tab here and see that the first ETF, which makes up the largest portion of my portfolio, the HSBC MSCI World, is down by 1.06% over the past month. This isn't surprising, as this ETF is heavily exposed to the US, and as we found out earlier, the US had a bad month. The next ETF also had bad performance in the iShares MSCI World Small Cap. In fact, this was my worst performing ETF over the past month. It was down by 4.6% over the past month, and this has been heavily impacted by the Fed's suggestion that they'll expect fewer rate cuts next year than previously forecast. Small caps tend to do better in low interest rate environments. So the fact the Fed have signalled they expect fewer rate cuts next year is not good news for small caps and has led to this bad performance we're seeing here. The next ETF has also seen bad performance as a result of the Fed's actions in the iShares Physical Gold. This is down by 3.18% over the past month. Gold tends to compete with other low-risk assets, and there's many other low-risk assets like bonds which tend to do better in high interest rate environments. So the fact that the Fed have suggested that they'll keep rates higher for longer by signalling there'll be less rate cuts next year, that's good news for bonds. And it's not as good news for gold, as bonds have become more appealing with rates staying higher for longer, which means less investors are going to move funds from bonds to gold, and probably more investors are moving funds from gold to bonds. So that's likely one of the key reasons we've seen this bad performance here. The last ETF is also in the red in the Wisdom Tree Cloud Computing Fund. This is down by 0.75%, and given that this ETF is heavily focused on US companies, again, it's not surprising it's in the red this month. If we now switch and see the performance of these ETFs over the past year, we can see it's very different performance over the past year. They're all in the green. The HSBC MSCI World is up by 19.94%. The iShares MSCI World Small Cap is up by over 10%. And the best performing ETF is the iShares Physical Gold. This is up by over 28%. And a reason why gold has likely done well over the past month is likely to be institutional investors have put a lot of money into gold, and also the fact there's been a lot of geopolitical tension this year with the Middle East wars and the war happening in Ukraine and Russia. Gold tends to do well when there's geopolitical instability, and there still is at the moment, and that continues to linger going into 2025. The final ETF in Wisdom Tree's Cloud Computing is also in the green. It's up by 13.96%. I'm happy to see good performance here, as this is my passion sector, and for much of the first half of the year, the ETF did extremely bad. It was in the red. But then in the second half of the year, we've seen a bounce back with this ETF, and it's done much better, so I'm happy with the overall performance. And I'm happy with the performance of all 4 ETFs here to see that they're in the green. So overall, although it's been a bad month for my portfolio, we can see it's been a relatively good year. As I said before, there'll be many portfolios out there which have done much better than this, but for me, I'm happy with it. My next video will focus on reviewing the first year of my 3-year plan to get this portfolio to 100k. So I'll be going through whether I'm still on course, the mistakes I've made, the lessons I've learned, where I've done well, And that will all be in the next video. If you want to check out a 3-year plan, I have a video around here. But for this video, thanks for watching, and if you're watching before Christmas and New Year, hope you have a great Christmas and Happy New Year. Thanks.